Hello, everybody, and welcome. So we're going to do another question relating to non-current assets, and this is going to be determining goodwill and also talking about how we go through and amortize a intellectual property or patents. This presentation is by the accounting professor, Bennet Tchaikovsky. Hello. This presentation is copyright 2008 to 2024 by Bennet Tchaikovsky. All rights are reserved. Any redistribution is expressly prohibited without my prior written consent. Opinions expressed herein are those of myself and do not represent those of Irvine Valley College or the South Orange County Community College District. So let's go to it. So coming over here to this particular question is we basically have Zizix purchase the assets and liabilities of Coinbit for $4 million on August 1st, 2026. As part of the agreement, ZI was to assume any liabilities that CI had. The following represented CI's balances as of 8/21/26. So we're asked to basically provide the record the purchase of CI on 8/21/8/1/26. So when we go through and purchase a business, well, this is what's going to happen is that we did the financial accounting, like anything related to common stock and retained earnings when we're basically doing an asset purchase, this pretty much goes out the window. What we're going to go through and do is we're going to basically we're going to hire an appraiser because when we're recording financial information, there's a lot of limitations. Like equipment is going to be recorded at historical cost. If there's patents, patents are only going to be recorded at the cost to go through and defend those patents. So we hire an appraiser. The appraiser is going to go through, basically appraise the value of the assets and assets we're purchasing, the liabilities we're acquiring, and we're going to go through and use the appraiser's information to go through and record it. So we hired an appraiser. The appraiser indicated the following. So let's kind of think about this intuitively. When I'm buying a business, and we'll say on 8/1/26, account, debit, credit, right? So the one thing I do know is that basically when I buy this business, my cash is going to be going out the door for 4 million. Right. So if I'm paying for this business in cash, my cash is decreasing by $4 million. And we can kind of see right up here for 4 million on August 1st, right? So my cash just went down. So what exactly am I going through and receiving? Well, as we look at this over here, I'm getting cash. And we generally are going to be getting whatever cash is on the books. If we have to kind of do this a little bit separately, we don't kind of go through and commingle, but again, it's going to be by agreement. And cash is going to basically be whatever cash is cash. But right over here, it says that the accounts receivable had a fair value of approximately 379. So we're not going to use this 500. We're going to use 379,000. Then over here, it says the inventory has a fair value of 280. So we're going to use 280,000. Remember, when we buy a business, we have to hire an appraiser. The appraiser needs to help us determine what the value is of the assets we are acquiring. Then it says the equipment has a fair value of 2.5 million. And then it says the patent has a value of 120. Okay, so again, we're going to the appraiser. The appraiser basically says this is what it's worth. If I go to look at a company that has made a lot of acquisitions of different types of intellectual property, and we're going to go here and look at our friends at the Disney. If I look at the Walt Disney Company, when you see like over here, when you go through and see their intellectual property, So you see over here, like basically it's got intangible assets, right? So that's like the Marvel, the characters, that's the Star Wars. Those had a value, those have a value approximately of 11.1 billion, right? So that is intellectual property that Disney either acquired from Fox, Lucas, Marvel. And so when they basically buy this, they're going to basically value every single character. Like Jar Jar is like $5, Han Solo is in a couple million. So coming back over here, right, to go through and look at, this particular part, we're not done yet, but that's where we're kind of going through and looking at the fair value. We have to hire an appraiser. So the other things I'm also acquiring though is the debt. Okay, so the accounts payable is going to be at 450,000. Now, one of the things is that when you're going through and being a part of this, I had an experience once where one of the companies I was working for, basically this company that we were being acquired by had such bad credit. So when you're being acquired and there's someone's going to assume your liabilities and your assets, make sure that they have good credit. Last one here is loan payable. My loan payable had a balance over here of $1 million. So I'm taking on that liability. So when I come over here and I look at basically my accounts, right? So this over here is going to be total of 3.3 million. And my assets, my credits are 5.45 million. My account does not balance. To balance this particular account, what I'm going to need to do is to have a debit for 2,071,000. This amount, or whatever the excess and the purchase price and liabilities being assumed over the fair value of the assets, this is what we call goodwill. If you look at Disney, their goodwill is 73 billion. Now they seem to have basically impaired goodwill, but at one point it was higher than this. I think it was close to I think it's been more than 80 billion, but don't quote me. But when you have goodwill, we basically say this is what it represents when we're making an acquisition. So we throw out the fair value, we throw out the book value. We're then looking at the fair value of the assets when it's basically being sold. So over here, this is going to be the record acquisition of CBI. Okay, so this is over here. We basically acquired Coinbit, and that's how we're going through and doing. So we've got this right over here. And now we've got down over here, prepare the journal entry to record the purchase of CI. So that's the first question. Now, when it comes to the patents, right? So patent, we recorded the patent on our books at $120,000. When it comes to patents, I really have two different options in terms of amortization. Now, there's really going to be no salvage value. Rather, what we're going to do is we're going to take the patent. Basically, we're going to divide it by the lesser of the legal or useful life, right? So over here, I can clarify this, had a useful life of 10 years and a legal life of 15 years. I'll add that to the question. So prepare the journal entry. So the patent has a value to us post acquisition of 120. I then have over here, I'm dividing this by the lesser of the legal or the useful life. It says a 10-year useful life. So the amount of annual, and we don't call this, it's not, basically, it's essentially what is depreciation for intangibles, or known as annual patent amortization expense. So every year we would be taking $12,000 of amortization expense on the asset. right, on the patent. Now, when it comes to going through and recording this for 12/31/26, is 12,000 the amount that I'm going to record? The answer to that is a big no. You should know this from looking at all my problems. I always play around with the dates. So coming over here, I bought this asset on August 1st. So I need to multiply this by 5/12, or from 8/1/26 to 12/31/26. So this is going to give me 12,000 times 5/12, or $5,000. Now, when I record amortization expense, well, how do I record an expense? It's going to be amortization expense. Okay, so this is going to be date, account, debit, credit. So I know I'm recording amortization expense for 5,000. Now here I have a choice. I can either credit the patent directly, or I can do the wiser choice of saying accumulated amortization patent. I can say that instead of just directly crediting the patent, but I believe you can do either. But I kind of like using the accumulated amortization just because it shows how much we've amortized this patent to date. And this would basically come over here and to record amortization expense. And if I didn't know, like, what is the journal entry for amortization expense? See how that, what AI tells us. Right over here, directly going through and crediting it. Yeah, you could either use accumulated amortization, or you can just credit the item directly. Okay, so I've seen it both ways. So anyways, so thank you for joining me here today on this particular question, and I look forward to seeing you on the next video. Have a great rest of your day.